Week is now the time. Well, they are showing a rise all across the country this week at least. Freddie Mac out with its weekly survey. Here's a look at some of the averages. Nationally, the 30-year fixed rate average is up to 5.29%, with the Southwest seeing the largest week-over-week move.
So what can we expect in the weeks ahead? Here with his take is Drew Kessler, Director of Sales at Rand Mortgages, and a man who is not afraid to put the money on the line and suggest where interest rates are going to be a month from now. You say they're going up maybe 0.5%.
Well, I'm looking at a market right now where we've been flat for months now. We've been seeing the range of give or take between 5 and 5.25, probably for a good 3-4 months. I see it inching up. I don't see anything drastic happening. I don't believe we're going to be at 6%.
Half a point?
I could see us being in the mid-5s. I think 5.5 to 5.75 is a realistic number for the coming months. And when I say the coming months, probably the start of the fourth quarter, we're going to be there and possibly even be at 6% the start of the year, because that's really where we should be. You know, the government's kept these numbers down for so long now, and it's sooner or later it's going to, come back, not to bite us, but to get us where we really should be.
Well, we know there are fence sitters out there who've been waiting, and anything should tell them certainly that now is probably closer to the time, because we have seen a couple of moves where we were down and then moved up and then down and then moved up, but not coupled with a move that looks like we're seeing better, healthier economic numbers.
Well, we were looking at what I called the perfect storm for months on end. We looked at a position where historic rates were at the all-time low. We were looking at price points as low as they've ever been. We're now seeing a market start to neutralize, and we're starting to see stabilization that we haven't seen before. It's in no stretch a seller's market, but we're starting to see things come back, markets starting to come back alive, things leveling out, that the bargains and the discounts that people saw 6 months ago might not be here in a couple months. And the other thing we're up against is you have the first-time homebuyer credit, where you have to close before December 1st to take credit of the $8,000 that the government's giving. Once that's gone, it might not be coming back.
Now, yesterday we had word that the government's going to phase out its buying of treasuries, flat treasuries. They had a $300 billion buying program, probably not much more after that. But they are going to continue to buy the mortgage-backed securities from the Treasury. That will continue to help keep a lid on the interest rates.
Well, again, that's going to help, because you're not going to have the situation where we're basically, relying on Wall Street to buy our paper. We're now looking at the government coming in and swooping in and keeping things, relatively good. So that will help keep rates, give or take, in the mid-5s. But we're ultimately looking at realization happening, and I think that's going to be, the mid to high 5s in the next 6 months.
Here's more realization. Reality is foreclosures look terrible still. The level of foreclosures doesn't let up, does it?
Well, we're finding the modifications aren't working out. That's the biggest issue. That if
this is where, for people who don't know what that really means, this is where I'm about to foreclose, let me remodify my mortgage.
The servicer is coming in and saying, let's figure out the payment that's going to work for you and hopefully keep you in this property.
Still not working.
Problem is that we just can't get low enough right now to keep these people with their roofs over their head. And we're finding about 25% of all people who are going through a foreclosure are strategically defaulting on their mortgage because they're either looking for a better deal, or they've come to the realization that, my house just isn't worth keeping right now, and the social stigmatism of having a foreclosure is not what it was 3 years ago or 5 years ago.
All the government help is not working.
It's not a bad word anymore. If you go back, through history, it was always bankruptcy, foreclosure. Those are the things you stayed away from. Today's day and age, it's not something that's thought of as a bad thing, which is a shame.
Drew Kessler, Rand Mortgage Director of Sales. Great to see you, Drew.
Thank you for having me.
Thanks for being here. Banks trying to make money in this tough environment, tacking on fees.